Hi there, this is your friend Luna Gentil again. Today, I want to address the issue of credit utilization. What is credit utilization, you may ask? A lot of people know what it is, they just don't know that's what it's called. They don't know the term. Credit utilization refers to the amount of credit you have used compared to how much credit you have been extended by a lender. It also refers to the ratio that the lender used to determine your credit worthiness and to extend credit to you. It affects your credit score as well. So the higher your credit utilization, the lower it brings your credit score. And most people do not know that. They don't understand what is credit utilization. Just so you know, your credit utilization affect your credit score by 30%. So 30% of your credit score is affected by your credit utilization. So that's why it's important for you to know what it is and how to reduce it. You reduce your credit utilization. So let's just say you have $1,000 in credit. So you have a credit card for $1,000 limit on it. If you use $500 off of that thousand, then your credit utilization is 50%. If you use $800, your credit utilization is 80%. The higher your credit utilization, the more it would adversely affect your credit score. And a lot of people don't realize that they think, well, I make my payment every month. Yes, you make your payment on time every month, which is good, and that counts for 25% of your credit score. But also, the next thing to it is your credit utilization. If you always have high balance on your credit card, then you are going to see that your credit score is not the best. It's not what it could be if your credit utilization was lower. So FICO and Advantage, Vanguard said that if you can keep your credit utilization under 30%, it will greatly help your credit score. So if you're trying to boost your score really quick, then you might want to keep your credit utilization under 10%. Crazy, right? I know that's what you're thinking. How can I only use 10% of my credit line? Well, it is possible. There are many ways you can use to reduce your credit utilization, and that's what I want to bring to your attention today. I am going to share my screen and we are going to go over some of those ways that you can actually reduce your credit utilization. First thing you can do is pay off or pay down your credit cards. If you can pay down your credit cards, that is going to reduce your credit utilization really quick because it's the percentage of your line of credit that you have used. So if you pay it down, then uh, if you pay your credit card down, then your credit utilization will get better. Also, you can ask for a credit line increase. If you had $1,000 and you use $500 of it, your credit utilization is 50%. But if you ask for a credit increase, then let's say they give you 2,000 instead of the 1,000, and you still have the $500 balance. So your credit utilization just went from 50% to 25% just because you asked for a credit line increase. You definitely want to do that if your credit utilization is high and you don't have any other way to reduce it at the moment. But if you have other ways, paying down your credit card would be the first thing. As for credit limit increase would greatly help as well. And you can do a balance transfer. So let's say you have one credit card with uh, $10,000 and you didn't use that credit card, but you have another credit card for 3,000 and it's maxed out. You can do a balance transfer and transfer that 3,000 to the card that has the 10,000. Your credit utilization is going to be great because you have transferred money. And sometimes people have low credit cards with low balances. You can spread your debt across those credit cards just to keep your credit utilization low. The credit utilization would be low compared for each lender, but in average, it's going to be the same thing because you still have the same amount of debt and the same amount of credit limit. So that's why if you can at all ask for a credit limit increase, that would help you a lot. Also, you can get a personal loan. You can get a personal loan from a friend, a family member, or you can get a personal loan from the bank to pay your credit cards. And you will say, well, why would I ever want to do that? Get a personal loan to pay my credit cards? Well, it might be a good idea for you if you are paying 25% interest rate on your credit card and you can get a personal loan maybe for 5-6% interest rate. You are saving a lot in interest. So if you can get a personal loan with an interest rate that is low enough, that is going to save you a lot of money on interest on the credit cards, you might want to consider that. But caution, that works only for people who has those credit cards and not going to max them out again. So you have to know yourself and work accordingly. If you have a spending problem, then no, don't get a personal loan to pay those credit cards because those credit cards are unsecured line of credit. They are unsecured debt. You do not want to go get a secure debt to pay off unsecured debt if you're going to get into debt again. Another strategy you might use is to use your tax return. Tax season is a great time to just get rid of credit card debt because they all have high interest rate. If you are going to receive a tax refund and you did not have plan for it, I would advise that you use it toward your credit cards and bring those balances down. Is going to help your credit score and your finances all around because then you won't pay those high interest rate on your credit cards. You can also open a new credit card to and do a balance transfer to reduce your credit utilization. Remember, the more credit you have available, the better your credit utilization look. So if you don't have enough and they refuse you a credit increase on your other credit card, you might want to consider opening a new credit card so that you can even out the balances between those cards. That would also help your credit utilization because you would have new credit available to, and you can do a balance transfer with that. Also, do not close your unused cards. I know people that say, as soon as I finish paying this credit card, I'm going to close it. That would be a mistake. If you close a credit card that you finish paying, then you close the whole history with that credit card. And payment history count for 35% of your credit score. Any type of payment history counts toward your credit score. So when you close a card, you close that whole history. And if it was good, you just did yourself a disservice and your credit score will go down. I had refinanced my house last year, and that was the longest, I guess, longest credit I was extended. I had that mortgage since 2005. And when I refinanced, my credit score went from 820 to 779. I was mad because I knew my score would go down, but I didn't think it would go down by that much. But it did because that was the longest payment history I had on my credit. But I said it before, credit is a game, and you have to know the rules of the game and play the game by the rules. I did not care that my score went down by over what, more than 40 points, because I was saving hundreds of dollars every month. I went from a 6% interest rate to a 2.99%. So I cut my interest rate in half. I did not care about the credit at the time because 779 was still a great credit score. And I knew that by paying my new mortgage, my score would go back up. I am still in the 800. I'm back in the 800 right now. So it was worth it for me. So know that whenever you close a credit card or any type of other credit you had available, you are going to see a decrease in your credit score. Also, you can, last time we will say, and that's my favorite to use, if you can decrease your spending, that is going to help your credit utilization as well. Look, there is a lot of apps available out there that helps you to see what membership you are not using that you're still paying for. They help you to close them, to identify them and close them. If you can reduce your spending, then a byproduct of that would be your credit utilization would get better. You would decrease your credit utilization and your credit score will go up. So those are the different ways that I found that was helpful to me. And I hope one of them would work for you to also reduce your credit utilization. Again, we say you can pay down your credit cards, ask for a credit limit increase, do a balance transfer, personal loan, use your tax return to pay down your credit card or pay them off, open a new credit card. Don't close any unused credit cards. You can transfer the balance to it. And if at all possible, decrease your spending. That is going to help you tremendously, because when your credit utilization go down, your credit score go up, then you can negotiate better terms on loans and anything you need to finance. So that's all that I have for you for today. Until next time, be safe.